Good afternoon, everyone. Welcome to another one of LAT's weekly market insights. Now, as we have a look across to the calendar, Monday and Tuesday we had no high impact data releases. As we come into Wednesday, though, the economic calendar did pick up for the rest of the week. Now, we had two main focuses of attention on Wednesday. One was the Bank of Canada that we will get to in a minute. The other was the budget release out of the UK, a little bit closer to home. So, sterling on the day on Wednesday was slightly weaker, but it is always pretty challenging to gain an overall picture on the budget as it affects many parts of the economy. We don't really know straight off the bat what sectors of the economy it's going to affect most, and what section of the population it's also going to affect the most. But the big story seemed to be better growth forecasts and lower borrowing forecasts, which did trigger a big rally in gilts on the prospect of a reduced supply of bonds. Now, staying on the topic of bonds, as we come over to the Bank of Canada, their decision when it comes to their statement, they were predicted to reduce their bond buying program from 2 billion Canadian dollars a week down to 1 billion Canadian dollars a week. But the hawkish surprise out of that meeting came as they decided to reduce their bond buying program to zero, completely remove their stimulus measures, which then fuels markets' fears of rate hikes earlier than they had initially anticipated. So we can expect to see some rate hikes from the Bank of Canada early next year, I do believe. Now, staying on the topic of bonds, as we look over to Australia, markets have pushed the yield on the April 2024 government bond to more than 0.7% overnight today, blowing past the central bank's targeted level of 0.1%. Now, the central bank were holding the yield at 0.1% to keep borrowing costs low, but now that they've given up on that, seemingly they have stopped buying bonds or selling bonds. They have decided to allow bonds bond yields to breach that 0.1%, saying that they may now have also stopped their bond buying program, and cost of borrowing in Australia may begin to rise as early as next year as well. Interest rates rising quicker than markets had initially anticipated. The Reserve Bank of Australia had communicated to markets that conditions for rate hikes would not be met till 2024. That now seems to be a change in stance from the RBA. Now, as we come into Thursday, yesterday, the main focus of the week was the ECB. The Bank of Japan were also out yesterday morning, so overnight on Wednesday, Thursday morning. That's always a pretty much a non-event, though. They are quite powerless to do much, influence the currency too much, but the ECB do have the power to influence the currency. Now, the main focus of attention out of the ECB yesterday was that they will continue to buy bonds at a moderately lower pace until at least the end of March 2022. Now, they have done this before. They have said that they're going to buy bonds at a lower pace, but every time that they have done that, they have increased the period of time in which they are going to buy bonds. So they've reduced the amount they're going to buy, but they've increased the time, which is, one hawkish step, one dovish step, and one kind of cancels each other out. Here, we've just got the hawkish step. They've just said that they're going to buy bonds at a moderately lower pace, but they're still going to end the program at the same time. So that is a bit of a hawkish statement from the ECB. Christine Lagarde did also suggest that they do have every reason to believe that the PEP program will end in March 2022, giving markets a fair idea that the PEP program will actually end in March 2022. In other news, as we come over the charts, we can see the UK 10-year, the gilt. This is the move from the 27th. If we come back here, this move higher here, pretty strong move higher on the day of the budget. We have since given back some of those gains now, but we will have to see how that reacts in the coming days, weeks and months. We can also see here euro dollar, big upside momentum off the back of the meeting yesterday. We have had another pullback. We have to see, do we get another move higher over the course of today and potentially next week. Look, the dollar CAD as well, we can see the big spike lower off the back of a hawkish surprise from the Bank of Canada, again relayed in the chart, which brings me over to Bitcoin. I mean, you can see here Bitcoin, you know, this candle here at 7 o'clock last night. I was on my phone last night, just flicking through Twitter, and it comes back and says Bitcoin is down 8% in a minute. So whatever went on there, I don't know. I haven't really been able to locate a reason as to why that happens, but you know, a massive sell-off drops just looking at it there, over $5,000 in the space of a minute. That is an hourly time frame, but down the minute time frame, if you want to go and look at that, you will see what I mean. So bit of a crazy move. In other news, bit of random stuff going on with Bitcoin doing things that it likes to do. Anyways, if we come back to the calendar and we have a look towards next week, see what we are looking at next week, possibly the busiest economic calendar that I have seen in my years of trading up until now. We've got PMIs out of China, pretty big figures. We've got retail sales out of Germany, PMIs out of America, you know, all high impact data releases. You know, the minutes out of the Bank of Japan, you know, probably not going to get much off that. As we look towards the RBA, the interest rate decision and rate statement, again, the RBA are out next week. It'll be interesting to see what they say after the government bond dated to April 2024 the yield is now blown past their target. So it will be interesting to see how they react to that. We've got employment out of New Zealand. We have got the Fed. We've got services PMI. We've got the Bank of England. And we have also got non-farm payrolls, and it's every second month. They've got Canadian employment, so we do have that as well. So it's not very often you get the Fed and non-farms on the same week, plus you throw in the Bank of England, plus you throw in the RBA, plus you throw in some PMIs and employment figures out of New Zealand. Sorry, we've got a very busy economic calendar to look towards next week, which means that markets are likely to be dominated by the calendar. Maybe technical levels don't work so well, and we may have to focus our attention a little bit more towards the fundamentals. But how you fit a trade in there, trying to dodge all of these data releases, I don't know, but that's a problem we'll figure out for next week. We'll enjoy our weekend, and we will be back on Monday to begin another week of trading. So yeah, that's it for me. Everybody, do have a good weekend, and we will speak to you next week for another weekly market insights. Thank you.